If you spent any time on social media over the past months, then you'd think crypto was completely finished. Everywhere you look is doom. People are saying the bull run is over forever, and people are saying crypto is dead. People are panicking and people are selling. I actually think something far more important is happening, and I think a lot of people are completely missing it. In my opinion, this market is showing just how much crypto has matured over the last few years. Because if institutional investors weren't here, I honestly think the market would look dramatically different. So let's talk about it. If you're new here, my name is Matty, and on this channel we talk about crypto, investing and helping everyday people navigate this market with a level head. Now, before we start, let's look at where we are actually today in terms of crypto, because Bitcoin is sitting around $63,500 US. Ethereum is around $1,800, and XRP is trading just around $1.13. Now, are those prices lower than many people had hoped for? Absolutely they are. Has sentiment fallen off a cliff? Yes, definitely it has. But here's the question I want you to think about. Are these prices actually bad? Or have we simply forgotten what previous bear markets really look like? One thing that's become incredibly obvious over the last few months is this. Retail investors have largely disappeared. The excitement isn't there. The taxi driver isn't talking about Bitcoin anymore. Your neighbor isn't asking about how to buy XRP. And TikTok isn't flooded with the Moon Boy videos. Google searches are nowhere near previous highs for crypto, and trading volumes from retail are much, much quieter. Even surveys in the UK show that crypto ownership has fallen from around 12% of adults to roughly 8%, suggesting participation has dropped significantly over the last year. That's a huge decline. Now, retail has definitely stepped away, and that's exactly why I think today's market is so fascinating, because despite retail disappearing, the market hasn't completely collapsed. But why? And I've really been puzzling over this, because somebody else has taken their place. This is where I think most people are massively underestimating what's happened over the last couple of years, because institutional money has fundamentally changed crypto forever. We've now got investment funds, asset managers, public companies, professional investors, spot Bitcoin ETFs, pension exposure in some markets, and major financial firms treating Bitcoin and other cryptos as a legitimate asset class. That simply didn't exist in previous cycles. And here is my opinion. If all of that institutional money disappeared tomorrow, I genuinely believe we'd be looking at a very, very different market. Personally, I think Bitcoin could easily be somewhere around $25,000 US. Ethereum could potentially be just a few $100s. And XRP, well, probably below 30 cents. Now, those aren't predictions. Those aren't facts. They're simply my opinion of what this market might look like if institutions hadn't been providing such enormous buying pressure over the last couple of years. Because let's be honest, retail isn't holding this market together anymore. The institutions are. And this is why I'm actually feeling surprisingly optimistic. In a sea of social media where everybody's down and just gloomy, I'm feeling optimistic not because prices are going up, because they're not. And not because social media is bullish, because it certainly isn't. I'm optimistic because crypto has matured. This isn't the same market we had 5 or 6 or 10 years ago, because back then, if retail disappeared like it has now, everything disappeared. But today, institutional money provides a foundation that simply didn't exist before. That doesn't mean prices can't fall lower. Of course they can. Markets always move in cycles. But the structure underneath this market is completely different. Crypto has gone from being a niche retail experiment to an asset class that's being taken seriously by some of the biggest financial players on the planet. And that is a huge change. I don't think enough people appreciate just how significant that is. So what am I doing? I'm doing exactly what I've been doing for months and months and months. I'm accumulating. Not because I know where tomorrow's price is going, because I don't. Nobody does, no matter what the chart geeks on TikTok tell you. I've been buying Bitcoin and XRP every single day since October 2025. Earlier this year, in January 2026, I also added Ethereum to that daily accumulation. But why? Because I don't believe in trying to perfectly time the market. I've learned over the years and over multiple cycles that trying to pick the exact bottoms usually ends badly. Instead, I average in. Some days I buy high, some days I buy low, but over time, my average cost takes care of itself. It's a much calmer way to invest, and psychologically, it's so much easier than constantly asking yourself, should I buy today? What if it falls tomorrow? What if I miss the bottom? But plenty of people successfully build positions over time exactly like I am. And this is a strategy that works for me. Now, I do add other elements into it as well. I need the fear and greed index to be in fear or extreme fear, which is exactly what we've seen for months and months and months, which is why I'm on daily accumulations. When we move out of that zone into neutral, I'll do nothing. When we move into extreme greed, I'll start selling in sections slowly but surely with intention. Everybody has to make their own decisions, but that is how I approach it. And it's worked for me over multiple cycles. One thing I've noticed recently is that if you spend all day on social media, you'd think the world is ending. Everything is negative. Everything is panic. Everything is fear. And that's understandable. I do honestly get it. But remember this. Fear gets clicks. Remember, when somebody's pumping you with fear content, they're probably doing it for clicks. But something happened during our live stream inside the Crypto Wolfpack last night that really stood out to me. The conversation wasn't full of panic. Nobody was screaming that crypto was over. Nobody was making emotional decisions. Instead, people were talking, asking questions, looking at the charts, discussing macro conditions, sharing different viewpoints, and talking about accumulation strategies, and also helping people stay rational. And it reminded me of something. Crypto can be an incredibly lonely place. If you're doing this completely on your own, it's very easy to let emotions take over. Fear becomes bigger, bad decisions become easier. But when you've got a community of people discussing the market in a calm, balanced way, it changes your mindset. You stop reacting emotionally. You start thinking logically. And genuinely, I think that's one of the biggest advantages of having a community around you. Now, here's the part that makes me genuinely bullish. Retail isn't here, yet prices are still holding up remarkably well considering the amount of fear that's out there. I've already told you what prices I think we'd be at. They're really low if institutional money wasn't here. But institutions are still accumulating. Companies are still building. Developers are still creating. And governments are still discussing regulation. The infrastructure keeps improving. None of that has stopped. So here's the question. What happens when retail eventually comes back? Because history tells us they always do. And usually at much higher prices. Usually when everybody feels safe again. Usually when the headlines become positive. If institutions continue building positions and eventually retail returns, that combination could become incredibly powerful. That is why I'm optimistic. Not because tomorrow will be green, not because next week will definitely be green, because I think crypto today is fundamentally stronger than it's ever been. So I genuinely love to know your thoughts. Do you think institutions are now holding this market together, or do you think I'm completely wrong? Drop your thoughts down below and comments because I'd love to read them. And if you'd like to surround yourself with people who are discussing the markets calmly rather than emotionally, that's exactly why we've built the Crypto Wolfpack. We analyze the markets together, we learn together, we help each other navigate both the good times and the bad. You can check it out by visiting cryptowolfpack.co.uk if you'd like to join us. And if you've enjoyed today's video, don't forget to hit that like button, subscribe if you're new, and we'll see you on the next one. And remember this, you don't have to do this alone. The strength of the wolf is in the pack.